Good afternoon. I'm Geoff Newcombe, Chair of NGS Super, and I'm pleased to welcome you to NGS Super's 2023 Annual Members Meeting. Joining us remotely today are the NGS Super's Board of Directors and members of the executive team, and I welcome them and thank them for their commitment during the year. I also acknowledge and welcome our auditor from PwC, Ben Tomset, and our planned actuary from Mercer, Tim Jenkins. Before starting the meeting, I'd like to acknowledge the traditional custodians of the lands we are meeting on today, both here in Sydney and from wherever you may be joining us. In Sydney, we're meeting on the lands of the Gadigal people of the Eora Nation. I pay my respects to elders past and present and acknowledge the connection our First Nations people have to the lands and waters on which we are living and meeting today. This annual members meeting will work in the same way as last year. I'll make a few comments and then our CEO, Natalie Previtera, will outline the current and future focus of the fund. Our Deputy CEO and Chief Strategy Officer, Ben Facer, will provide insights on key strategic initiatives, while our Chief Investment Officer, Ben Squires, will provide a report on the financial markets and the fund's performance. During the meeting, you can ask questions by typing your question into the Ask a Question box underneath this video player on the screen. While we cannot answer any questions that relate to your personal circumstances, we will respond to as many questions as we can in the allotted time. This will include those that were sent to us by email before the meeting. All questions and answers, as well as a recording of this meeting, will be on the NGS website by Friday, 15 December 2023. It is 35 years since NGS came into being as a superannuation fund for education professionals. While we have changed and grown significantly since first opening our doors, the things that make us unique have not changed. As a fund built for education professionals, by education professionals, we understand that members want a fund that offers personalised service and support, low-cost, high-quality products, and delivers competitive returns. This year, the staff at NGS have continued to deliver against each of these core pillars. We also cemented our commitment to deliver a sustainable and prosperous future to our members, making further progress towards our goal of a carbon-neutral investment portfolio by 2030. The team will provide more detail on the work we've been doing and will continue to do in each of these areas. This year we made several changes to the executive team, which I believe have strengthened our capabilities. The board was unanimous in appointing Natalie Previtera to the role of CEO. During the 9 months Natalie acted in the role prior to her appointment, she demonstrated a deep and genuine passion for delivering increased value to members. This, coupled with her extensive experience in financial services, gave the board confidence that Natalie is the right person to lead NGS into our next phase of growth. In addition to Natalie's appointment, the fund's Chief Strategy Officer, Ben Facer, was elevated to Deputy CEO. Joe Klingberg was appointed as Chief Growth Officer, while Philippa Mini was appointed as Chief Risk Officer and Head of Corporate Services. These appointments have lifted the expertise and capability within the fund. I know that the executive team will continue to maintain the strong and positive culture that is evident among staff at NGS, with an absolute focus on delivering for our members. May I take this opportunity on behalf of the board to congratulate and thank Natalie, Ben, the senior executive, and all staff for their commitment and professionalism throughout the year. I would also like to thank the Deputy Chair, Georgina Smith, for for the wonderful support she has given me throughout the year. The super industry is always evolving, and this year has been no different. Super guarantee contributions increased to 11% and will continue to increase by 0.5% until they reach 12% in 2025. These ongoing increases are good for super savings, as the benefit of compound interest increases balances over time. In the last budget, the federal government announced the move to payday super, which will see employers required to pay employee superannuation contributions at the same time as their salary and wages instead of quarterly. While employers have until 2026 to make this change, commencing now will help position them as an employer of choice. The team at NGS can help and support employers who might need assistance. The Retirement Income Covenant has placed an increased focus and expectation on super funds to help members achieve a better retirement, including helping members live comfortably and manage retirement risks. Natalie will share more about the recent launch of a retirement solution designed to meet this need. And recently, the Super Members Council of Australia was formed following the merger of the Australian Institute of Superannuation Trustees and Industry Super Australia to create a single collective voice for the not-for-profit sector and their members. NGS has joined the new organisation, whose purpose is to advocate on behalf of members to ensure superannuation policy and its implementation is stable, effective and fair. NGS will continue to respond to change within the industry to ensure that regardless of what age and stage of life you may be in, you will continue to thrive as a member of the fund. I'll now hand over to our CEO, Natalie, to share more on the results and plans we have for the future. Again, thank you for attending today's meeting. Natalie.
Thanks, Geoff. I'd also like to welcome you to the meeting today and to thank you for choosing to be a member of NGS Super. I was delighted to be permanently appointed as CEO of NGS earlier this year, which came after a period of acting in the role for about 9 months and going through a comprehensive selection process. I have a deep passion for helping people understand and feel empowered about their finances. I want our members to feel secure and confident at every stage of their super journey with us, and I can assure you that this is what both myself and the team at NGS are focused on delivering each and every day. Today, I'm pleased to have the opportunity to share more detail about the work we're doing and answer your questions. But before I start, there is one piece of housekeeping. While I'm sure that most of you are now very familiar with online meetings, if you happen to experience any technical issues, please click on the Help widget at the bottom right-hand corner of the page, enter your details and the issue you're having. The support team will be in touch to help. This year marks 35 years since NGS commenced operations. When these milestones come up, it's a great time to reflect on how far we've come. But it's equally important, if not more so, to look to our future plans to ensure our members continue to thrive with us. NGS was founded in 1988 by education professionals with the vision of creating a super fund that catered to the unique needs and circumstances of people working in the sector. Our history and the boutique nature of our fund has and continues to guide the products and services we deliver to members. Whether our members are just starting out in their career, have been working for some time, or are ready to move into retirement, we're here to set them up for a happy and secure retirement. We ensure this by embracing our purpose, which is to help you and the world prepare for tomorrow. This ethos is hardwired into the way we work. from the development of our strategy to our approach to investing, the development of our products, right through to the support and personalised services we offer our members. Put simply, our members are at the centre of what we do, and you'll see this across NGS in the following ways. Our sector expertise, which comes from our history and our understanding of the unique needs of the education sector. Understanding you, our members, and providing the education, support and advice to help and empower you as you build your super and savings transition to and enjoy your retirement. Personalised service, which responds to member needs and helps you understand and make decisions about your super. Preparing for tomorrow. Now, we strive to create a sustainable future for members and the planet, which is why we've set our sights on having a carbon neutral investment portfolio by 2030. I'm going to touch on some of the work that responds to our understanding of members' needs through our products and services. Our Deputy CEO and Chief Strategy Officer, Ben Facer, will share details on how we're working to improve our administration model to continue to enhance the way you interact and experience NGS. While Ben Squires, our Chief Investment Officer, will share details on our investment performance and carbon neutral strategy. 2023 has been a time of action for NGS. We've been building on our strengths and moving forward with our plans to grow the fund, delivering what matters to our members. Throughout the year, we've put energy into further developing our personalised services and support, building our product offering and delivering competitive investment performance. I'm pleased to share that this has resulted in growth, with the fund continuing to attract members at all stages of their super journey. This growth ensures that we're able to deliver ongoing improvements that benefit members over the short and the long term. At NGS, we're committed to growing our fund in a way that matters. And what I mean by that is that we're not just chasing growth for growth's sake, but we're working towards growth that consolidates our position as the leading fund for the education sector and allows us to deliver the strong results and personalised services that you expect from us. When it comes to understanding the diverse needs of our members, we've focused on delivering information and resources in a way that is most convenient to you. We know how important this is, and we're dedicated to supporting you in a meaningful way at key points of your super journey. Our dedicated team of super specialists and financial planners are also available to help and guide you. Our super specialists and financial planners are really the cornerstone of our personalised service. This year, we've expanded our services in this area, opening a new office in Perth and growing our team in Melbourne. We've hired several new super specialists across Australia to directly help and support our members. Our super specialists have been in schools and other locations across the country, delivering face-to-face education sessions, as well as holding one-on-one meetings. And because we know how many of you now prefer the convenience of phone and online meetings, the team have been available through those channels as well. So regardless of where you are on your super journey, the team at NGS is here to provide information, tips, advice and support to help you make choices about decisions that relate to your super. Now, while advice and resources are important, we understand that a key component to a successful retirement is access to high quality and good value products. During 2023, NGS once again passed the Australian Prudential Regulation Authority's annual performance test. The test has been in place for 3 years now, and I'm pleased that NGS has passed each year. This year, the test also measured the performance of 805 choice products on fees and costs, and the test was put in place so that members can be confident that their super is being responsibly managed and doing what it's designed for, building savings for your retirement. When it comes to offering value for money, we keep our investment fees low by actively managing assets within the portfolio and balancing risk and volatility. We invest in the best opportunities. Every asset we invest in competes to be there, and our strong focus on innovation, business improvement and efficiency also helps to keep our fees low. You can be assured that your best financial interests are always front of mind. Now, many of you know that another feature of our products here at NGS is insurance. Most members will have the opportunity to opt in to receive a default level of insurance cover and create a safety net that will support you and your family when you need it most. I'd like to move on to retirement now. Some of you online today might be planning for your retirement. Some may be already retired, and while for others, it'll be a long way off. Whatever stage you're at, most of us have a dream of what our retirement will look like. At NGS, we want to ensure that our members feel supported throughout their working life and into retirement, so that you're confident you can manage financial risks and live a comfortable life. We're really proud of our new Easy Default retirement solution, which is being built with the needs of our members front of mind, and it was launched earlier this month. Ben Facer will provide some more detail on the Easy Default shortly. With great new offerings like Easy Default, our team are always working hard to provide you with the best opportunity to maximise your savings. We also do this through our investments. Delivering strong returns while staying focused on investments that also improve our tomorrow is core to our strategy. During the year, we have seen the cost of living pressures continue to rise, impacting the cost of almost everything. Our Chief Investment Officer, Ben Squires, will share more about what we've seen and what we're doing within our investment portfolios to manage this and continue to deliver returns. This year, NGS was recognised at the Super Review Fund of the Year Awards, where we won the Super Ratings Award for accountability and transparency. And we were also a finalist for the My Choice Super Fund of the Year and the Best Low Cost Offering Awards. For NGS, the Accountability and Transparency Award recognises the effort that we've put into enhancing our processes, and it demonstrates the value we place on ensuring the highest levels of transparency and accountability run through our organisation. It's the foundation of the personalised service that we offer, based firmly on trust that we will deliver what we say we will. I hope that these examples highlight how we're working for your future and the future of the fund. Through our commitment to improving our products and services, we're taking care of your tomorrow. I'm now going to hand over to our Deputy CEO and Chief Strategy Officer, Ben Facer, to share more on some of the key strategic initiatives.
Thanks, Natalie, and hello to everyone joining us today. I appreciate the opportunity to talk to you about the work we're doing to improve our member experience. Evolving our service model so we can deliver personalised service and support to members is core to our operations at NGS. In late 2022, we started working on a prioritised plan for improving our member experience across touchpoints like our website, our online member portal and app, our helpline, and the interactions you have with our super specialists and financial planners. This work has since dovetailed with the review of our administration operating model and provider, which we started late last year. The main drivers for both areas of work include improving operational efficiency, enhancing our ability to deliver tailored products and services, and improving the provision, quality and accessibility of our advice and education services. These projects have also given us the opportunity to see how we can integrate innovative technologies and advances in systems delivery into our operating models to enrich our member experience. While we have made a great deal of progress on these projects, we are not in the position to share the outcome of these projects with you today. But what I can share is that we're confident that we're working towards delivering a technology-led, efficient operating model that will ensure the fund remains competitive and continues to grow. It will also give us the flexibility to enhance digital experience delivered through our website and online portal, and improve the overall service, education and advice capabilities to benefit all of our members. You can be assured that we're undertaking detailed planning for the transition to our new model to minimise any disruption and ensure that we have the capability to support success. Earlier, Natalie mentioned that our purpose is to help you and the world prepare for tomorrow. Having strong risk management in place is essential to us achieving this goal. Across the year, a significant amount of work has gone into building a better understanding of these risks that may be a barrier to our success and achieving operational excellence. We know that when risks are not well managed, it has an impact on the business in terms of cost and efficiency, which in turn affects the products and services we deliver to members. This year, we put a significant effort into strengthening information security within the fund and have reviewed our organisational risk framework and lifted the emphasis on risk management. We've also recruited several new staff to lift our expertise and capabilities and provide a stronger focus in the areas of risk, compliance, cyber and information security. The experience we have brought to the fund is helping us to strengthen protections within our business and technology platforms and inform decisions on future opportunities in the areas of product, service, investment and sustainability. It is supporting our move towards operational excellence across the fund. Our work in this space will be ongoing as regulation, markets and technologies change, but I hope this gives you an insight into how seriously we take security and risk management at NGS. Finally, I'd like to touch on a couple of areas where we have been working hard to ensure that our products are most suited to the needs of our members. We believe it's important to offer members access to quality insurance. Although it might be difficult to think about, it's important to be prepared for the unexpected. Being able to support family members and loved ones financially in what is already a difficult time is important to us. We reviewed our insurance offer in late 2022 in order to align our income protection benefits more closely with the typical claim duration, whilst reducing premium costs for default cover. At the same time, we introduced features such as the ability to dial your insurance down and up in line with work patterns, such as taking paternity leave, with minimal health evidence required. This can further help members with the affordability of insurance at a time where cash flow and contributions to your super might be reduced. We're currently conducting a further review of our insurance offer, and we are confident of being able to announce some exciting changes in 2024, both in terms of benefits and costs. This year, we've also spent a lot of time building a stronger understanding of our members' needs in retirement, building out resources and product solutions to help members prepare for their tomorrow. Earlier this month, we launched the Easy Default retirement solution, which has been designed to give you the confidence of knowing that your retirement savings will support your lifestyle today and continue to grow and manage risks in managing your savings and income in retirement. In developing Easy Default, we tapped into what our members told us they were looking for to help them in retirement, which includes a regular stable income, investments that offer growth, the flexibility to make changes, and helping to manage the financial risks of retirement. Easy Default ticks all these boxes. It gives members a simple way to set up an account and manage their retirement savings using a strategy of allocating investments to different buckets, which allows a regular income to be drawn from cash, while the majority of their funds are invested in growth assets that continue to work hard for them. It offers flexibility and peace of mind when it comes to managing income and the financial risks that can come with retirement. We're also continually enhancing the information available on our website to help you to prepare for your retirement well in advance, to establish the right product, and to manage your account in the future. When you have a moment in your busy schedule, please check this out. We're continuing to work on all areas of our product solutions, insurance, investments, and retirement, so please watch this space over the course of 2024. I'd now like to hand over to our Chief Investment Officer, Ben Squires, who will report on our investments. Thank you.
Thank you for taking the time to join us for the annual member meeting. In this update, I'm going to discuss the fund's investment activities, some of the challenges faced in investment markets over the year. I'll then discuss investment performance and end with a few examples of investments that we've added to the portfolio that we believe improve the future return prospects for our members. Now, over the year, the fund has continued to invest in people and technological solutions with resources added within our shares, fixed income, infrastructure asset class team. We've also integrated more technology solutions to advance our operational efficiency and improve forecasting capabilities, which we utilise as part of our asset allocation framework. This is foundational work which enhances our portfolio decision making. Navigating the investment environment has been challenging as we've transitioned from over a decade of disinflation, low interest rates, and now into an environment of high inflation, high interest rates. Most central banks around the world have been tightening monetary policy over the year. We've seen geopolitical tensions rise and continue to emerge, and all these elements are creating a high degree of volatility or uncertainty in markets. The US continues to be an outlier with continued economic growth, whilst Europe, China and Australia have experienced declining growth metrics. The signals of slowing inflation are very clear across the manufacturing sectors of the economy, yet the enormous monetary and fiscal stimulus measures introduced by governments and central banks during the COVID-19 pandemic are yet to be fully spent by consumers and are most evident in the service sector inflation readings. Combining this residual stimulus with factors such as higher energy prices, full employment, geopolitical events and environmental events disrupting food production, inflation remains above central bank target levels, and many economists are arguing that the new neutral rate of interests will be higher in the future. The speed in which monetary policy has been applied is largely unprecedented in recent history. And after the effects of these increases are likely to see many casualties in the economy, including a higher chance of a recession in 2024. Now, shares have fallen along with long duration bonds as rising interest rates result in investors rethinking their future expectations. This coloured quilt chart shows the performance of the sectors in which we invest over each calendar year. The new financial year brought with it high volatility as economic activity slowed down due to money supply continuing to be removed from the market, and we saw that financial stability within the US banking system was tested with the fall of Social Ventures Bank and a number of other small regional banks. We've seen default rates on credit continue to rise and new housing development declined, which is all symptomatic of an environment in which central banks are hiking interest rates and governments are reducing spending. The last column shown here shows us the leaders in our sectors that we invest in as of October of this year. We can see that growth alternatives, private equity, infrastructure and cash are the top performing asset classes year to date, whilst listed infrastructure, bonds and listed real estate are all the weakest. The change in leadership within these various sectors really demonstrates the importance of diversification within a portfolio. However, over the long term, shares generally outperform other asset classes, and this is why it's really important we have a high allocation to these asset classes within our diversified MySuper product. Now just moving on to our Carbon Neutral 23 update. We continue our efforts to build a resilient portfolio that avoids sectors and companies that we believe will become stranded, thereby losing value or are less competitive in the future. This is illustrated in this chart, which we show the decarbonisation projections for our diversified MySuper option. Now, I'm really pleased to report that we have already achieved our interim 35% reduction of carbon emissions 2 years ahead of schedule. The current carbon intensity at our latest reading this year is even below the target by 12%. Now, this represents a 47% reduction in carbon intensity of our portfolio from 2021 levels. The dotted pink line shows our actual carbon intensity against our projections. We also show the upper and lower bounds of what we predict our carbon intensity to be by 2030. We are forecasting that there will be a residual carbon position by 2030, and we are currently reviewing a variety of carbon offsetting investment opportunities. Now, if we can't get comfortable with these carbon offsetting investments from a risk and return perspective, then we need to recast our carbon neutral timeline beyond 2030. It's too early to make this conclusion. However, we do expect to have a firm position on this within the next 12 months. The important thing to remember is that we will always prioritise the best financial interests of our members. So how is the NGS portfolio positioning to weather the current economic environment? War, recession, inflation. How are we to interpret asset class returns? Now, this matrix outlines our scenarios we've applied to markets and asset classes over the 6 to 12 month time horizon. These scenarios help us determine the likely return we could expect to receive on the various asset classes in which we invest, such as shares, fixed income, infrastructure, real estate, commodities and cash. A darker green colour indicates a positive view of an asset class, whereas a red colour indicates a more negative view. Each scenario results in the asset class return forecast being weaker or stronger. Cash and commodities tend to perform well in most scenarios outlined here. To the first question, will the war between Hamas and Israel escalate? Well, from an asset allocation perspective, we believe it's likely contained in the Gaza Strip in the near term, and we assign a higher probability to this outcome. A key indicator of escalation will be whether Hezbollah joins the fight against Israel. Otherwise, the events may prove isolated to the Hamas and Gaza Strip for now. This lands us between scenarios 3 to 6, and in these scenarios we see commodities and cash being the best asset classes, followed by fixed income. So what is the probability of a recession in the next 6 to 12 months? Well, we're seeing credit conditions tightening, excess savings are closely to fully depleted, and we're beginning to see cracks in the system, and the likelihood of recession in the second half of 2024 is increasing. This is based on our view that the war will not escalate and therefore reducing the speed of a recession outcome. However, if the war does escalate, then a recession will likely occur earlier. So what to make of fixed income market conditions? Now, the market has priced in a 5.25 to 5.5% US federal funds rate, so the interest rate in the US. And they expect the Federal Reserve to hold rates constant until mid-2024, before the first cut. Economists around the globe are debating what the neutral rate of interest rates should be, and this relates to whether you perceive that we are in a new regime or not. Now, we would argue that we are in a new regime and interest rates will be higher going forward, despite secular stagnation remaining the consensus view. So how do we position our portfolio in the current environment? Well, we certainly continue to maintain an investment in shares, but we're adding greater defensiveness in our portfolio. So that's the posture that we're taking at this point in time. And how does Australia compare to the rest of the world? Australian households have around $239 billion in excess savings, but real wage growth remains negative, indicating further depletion of those savings. Australia doesn't have excess labour demand like the US, but still has very tight labour markets by historical standards. The Australian mortgage market and mortgage rate moves up with RBA in lockstep, while the US mortgage rate is largely fixed. Therefore, consumers, and by the extension the economy, is more sensitive to the impact of higher interest rates in Australia. Now, what do we make of currency and commodity markets? Well, the fair value of the Australian dollar still points to a level around 70 cents per US dollar. However, given the recent geopolitical risks and rising US interest rates, the Australian dollar may fall from current levels. On the commodity side, the stable demand and shock to supply will likely put a floor under oil prices and gold is likely to perform well in this environment. And we foresee that we'll continue to hold or add to our gold position over the next 12 months. Now, this matrix takes it a step further and translates our current short-term asset allocation views across the various asset classes in which we invest. You can see that we are neither negative or positive on shares and bonds. However, we're slightly negative on high-yield credit and emerging market credit. We are positive on safe haven currencies such as Japanese yen and US dollars, and positive on cash, and continue to see good value in our infrastructure portfolio. So in essence, we're staying invested in risk assets, so shares, and we're adding additional hedges to solve for an uncertain outlook. In summary, our asset allocation is in line with our strategic asset allocation, which indicates we are neither positive or negative relative to our strategic asset allocation. However, we continue to add these hedges to our portfolio, such as gold. Over the medium to long term, gold provides a clear hedge against geopolitical risk and second wave of inflation and deep recession. We've increased our allocation to international fixed income. Bonds now act again as a diversifier in the case of a deep recession, as yields are more attractive. We're maintaining a higher exposure to US dollars as part of our foreign currency exposure. This provides a hedge against continued hawkish Federal Reserve and further geopolitical tensions. And we're frequently rebalancing our portfolio. As the recession approaches, we are still invested, however, we're taking profits and locking those gains in quicker. Now just moving on to fund performance. Performance for the financial year was strong, with a diversified option returning a solid 8.54% for the accumulation division and 9.75% for the pension division. These strong results were predominantly delivered from strong share market returns, which you can see on the left-hand side of this chart. International shares contributed 5.58% and Australian shares contributed 3.91%. The largest negative red bar on the right related to the depreciation in the Australian dollar relative to major OECD countries, but primarily the US dollar. Private equity is an asset class in which we invest and is a large part of our portfolio, with close to $1 billion invested in this asset class. Now, this is an extremely attractive portfolio of assets whereby we can select investments that we believe will generate strong returns and in many cases address some of those significant social problems or have emerging technological solutions that don't currently exist in the market. This is a long horizon asset class in which we need to stay invested for up to 10 years. Now, these are unique investments that the fund makes that aren't available to retail investors or available on share markets around the world, and are extremely valuable to member returns in the portfolio. We've been able to access them through our strong relationships that we've cultivated with global investment managers over our 35-year history. Our base case return for this asset class is 15%. Now, this represents approximately a 7% premium to listed share market returns. We continue to seek out direct investments that allow us to lean into secular themes such as space, artificial intelligence, feeding the population, climate change, healthcare, and quantum computing, to name a few. Now, the 6 images that you can see on the screen make up a part of our portfolio. Some of these are via fund investments or direct investments that we've made. In the domestic market, we've recently acquired interests in Boost Juice and Betty's Burger, and Pack Trading, which is a trading company that produces biodegradable packaging for the food industry. We have also exposure to rocket companies, satellite companies, quantum computing companies, drug discovery and bioagricultural companies, amongst the many exposures in our portfolio. And in many cases, these companies have patent technologies that are disrupting existing technologies. Now, just moving on to infrastructure. NGS has invested with the Clean Energy Finance Corporation, BlackRock Alternatives and other investors to build the Waratah Super Battery in the Hunter Valley in New South Wales. Now, the Waratah Super Battery is a system integrity protection scheme designed to act as a shock absorber in the event of any sudden power surges, including from bushfires or lightning strikes. The Waratah Super Battery is one of the largest committed battery energy storage in the world, and investments such as these support NGS Super's target of creating a carbon neutral investment portfolio by 2030. The good news is there are low fees on this investment, and the base case return that we have is 10% per annum. Again, on infrastructure, we've made an investment in 2 electric vehicle charging businesses in the UK and Europe, PowerDot and Raw Charging 2. Many European countries and the UK have ambitious targets for reducing greenhouse gas emissions and promoting the adoption of EVs. As a result, governments are supporting the deployment of EV charging infrastructure through grants, subsidies and other incentives, and we can make investments in these sectors which are very attractive. EV charging stations can generate revenue through a variety of business models, including pay-per-user, subscription services, or partnership with retailers or other businesses. The attractive thing of this investment is there are no fees, and the return profile again is attractive with a base case return of 10% plus. Another recent infrastructure investment that we've made is in Serenitas, which is a leading owner, developer and operator of Australian residential land lease communities. NGS Super has invested in Serenitas alongside Pacific Equity Partners. Now, we have a strong relationship with Pacific Equity Partners, and their value-add process will generate strong returns with, again, the base case return of 10% per annum. Land lease communities have a different buying model to a classical house and land purchase. Essentially, the buyer leases the land from the community developer but owns the home that they build or buy on. Land lease communities are seen as an alternative retirement living option due to their comparative affordability, as owners avoid stamp duty and council rates and pay no or low exit fees, and of course receive the government rent assistance payment. With the growing cost of living pressures, land lease communities are emerging as an alternative retirement living choice that allow people to release capital to purchase a lifestyle in lifestyle-rich areas. Another recent investment that we've made in our infrastructure portfolio, LMS Energy, which is Australia's and New Zealand's largest landfill gas operator. Landfill gas management and the destruction is a key decarbonisation enabler, as methane has 25 times higher CO2 than greenhouse gas effects than CO2 alone. NGS Super invested in LMS Energy alongside fund manager Pacific Equity Partners. Now, LMS Energy have a long-term contracts in place with an average weighted contract expiry of 23 years and a 100% track record of renewable. Waste to energy is a segment supported by favourable government policies such as carbon credits, and this investment gives NGS the opportunity to invest in the number one player managed by a strong management team. Again, we have attractive return profiles with this investment, offering a 10% base case return. Now, just quickly talking about our property portfolio. Our industrial property portfolio was established in 2012 and benefits from strategic locations across the eastern seaboard. Industrial property includes warehouses and has been the premium asset class since the pandemic. The fund has over $500 million of industrial assets located in metropolitan areas of Sydney, Melbourne and Brisbane, and we have 21 properties incorporating the potential for residential land rezoning in Sydney, land banking in Brisbane and development opportunities for expansion of existing and new building sites in Melbourne. This portfolio has delivered an 11.72% per annum return since the portfolio was established, and this is as at the latest performance report of September 2023. Once again, I thank you for joining us, and I hand back to Natalie to answer your questions and provide closing remarks.
Thanks, Ben, for your update on our progress towards a carbon neutral strategy and your insights on the markets and what we might expect to see in the year ahead. Now it's time to answer your questions. These will be shared by myself, Ben Facer and Ben Squires. Now I'll start with the first question, which I can see has come from Carolyn. Carolyn, you ask, apologies, I'm just trying to read that screen. Will you make more environmental and sustainable choices with how you use our money? Well, I think, look, the great news is yes, we're incredibly excited about the work we're doing in this space, and that includes investing in the Waratah Super Battery, which is a critical piece of infrastructure for New South Wales's future. Now, another company we're looking at is Intersect Power, and it's a clean energy company that's bringing innovation and scalable low-carbon solutions to its customers in the retail and wholesale energy markets. Now, given our target to be carbon neutral by 2030, we expect investments in these types of businesses to increase over time. We recognise that in addition to the positive impact these projects are having, they also have the potential to generate some really strong returns. I can see the next question is from Gil. Now, Gil asks, can you please provide a comparison report of NGS Super's fund option versus average Australian super fund returns for those options over 1, 3 and 5, also 10 years? Ben Squires, would you like to answer this question?
Thanks, Gil, for your question. Now, this information is readily available by third-party research providers and the regulator. So knowing that, NGS has not produced a custom version of its own. However, it is something that we can consider going forward. So thanks for your question, Gil.
Okay, now I can see the next question has come from Lewis, who's asked, will NGS be voting against remuneration packages and bonus shares for directors, given the director fees as multiples of employees' salaries? And if not, when? Ben Squires.
Yeah, so we don't have an automatic process to vote against directors. We look at the industry standards to ensure that any director's remuneration is fair and reasonable relative to the industry standards. So that tends to be our approach.
Thanks, Ben. Ian's asking, I'd like to know what the average return income was achieved on the diversified fund in my pension account as opposed to the overall growth, which includes capital gain or loss and dividends and interest. Can the two figures be reported as well, perhaps as the overall growth? Ben.
Yeah, thanks, Ian. That's a really great question, and it's something that we've been discussing internally. At this point in time, the information that we have between the capital and income split is quite fragmented, so it's difficult to accurately report on those elements, but it's certainly something that we're looking at producing in the future, because I think it will be quite valuable for members, particularly retirees, to understand the difference between the capital split and income split. So thanks for your question, Ian.
And the next question comes from Zoltan, who asks, with respect to NGS Super's investment in international and Australian shares, how can NGS Super assure these members that are hanging in there for the long term or hoping for a substantial rebound is better than converting to cash, which is becoming more attractive as interest rates continue to rise? Ben Squires.
Yeah, thanks. That's a fantastic question again. Now, future performance is very difficult to predict, and the market, as I mentioned, is very volatile. So if you go overly defensive or you go overly too risky, then the outcome can be quite binary. And because the future is uncertain, we build portfolios to weather all of those conditions. A good example is what we've seen in recent markets. So for the first 3 months of the new financial year, we saw negative returns from growth assets. However, the first few weeks of November, half of that has been made back. We've seen the Australian dollar rally against foreign currencies. We've seen bond yields fall, and we've seen equity markets rise. So that requires us to diversify our exposure. So I think it's very difficult to either take that binary position. So as a fiduciary, we take the probability of all the different events, but long term we know that investing in growth assets will generate the return that we have and over the horizon that we expect to generate. So that's really where how we formulate our portfolio decisions.
Next question comes from Sally, who asks, why are you pursuing legal action against NGS crypto? Thanks for the question, Sally. Look, NGS is aware that some members have been advertising or have seen advertising via online channels, including Facebook, about crypto products by companies that include NGS Crypto and NGS Group. We know the similarity in names is confusing, which is why we want to remind members that we are not associated with these companies. As NGS Super holds a registered trademark for its brand, we're pursuing our legal options against NGS Crypto and NGS Group in the Federal Court of Australia, where we've commenced litigation after our attempts at resolving the matter out of the courts was unsuccessful. We want to reiterate that NGS Super is not involved in selling cryptocurrency or crypto-related products, including but not limited to blockchain, and we would never approach you to discuss or sell this type of product. If you have been approached to invest in crypto products and have concerns, please contact us via our helpline. Next question comes from John, and John's asking, given the state of the world financial markets, why is NGS continuing to invest in risky investments? Ben Squires.
Thanks. That's a really good question. I think firstly, we provide a suite of products with different risk-return profiles. So as a member, if you want to be invested outside of share markets, for example, we have our cash option, we also have our bond option. So having that spectrum of products is really important, and seeking advice from a financial planner is a key part of helping members get through that decision-making process.
And we have a question from Ben and T, who ask, what have NGS done to respond to the cyber incident and to protect its members? Ben Facer.
Thanks. This is a really important topic and a really important question. And the security of our systems and our member data is really of the highest importance to us. Late last year, we recognised there was work to be done to uplift our protection in this area, and we started to take action to do so. The cyber incident in March this year, since then, we've increased that work that we've been doing, continually working with our service providers and our business partners to ensure that our information security processes and controls offer the highest protection. We were in the process of changing our IT provider, and we've now finished doing that. And in doing so, we've implemented a higher degree of technical controls over our assets in that time. We've also appointed a separate independent specialist security provider who oversee and monitor our systems 24/7, in addition to the monitoring that's done by our IT provider. We've also recruited additional specialist cyber and information security specialists in-house to continue to uplift our framework and implement better controls to secure our member data.
Thanks, Ben. Now I'm just checking to see if we've got any other questions, and it appears that we've answered all of your questions. Thanks so much for sending them in. So in closing today, I'd like to thank our Chair, Dr. Geoff Newcombe, our Deputy CEO and Chief Strategy Officer, Ben Facer, and our Chief Investment Officer, Ben Squires, for their presentations and insights today. I'd also like to thank the team who have worked behind the scenes to make today possible, including the NGS staff and the Caribbean team who have been fantastic. I'd also like to thank the board for their support and guidance, and our amazing NGS staff for their unwavering commitment to our members. Again, thank you for joining the meeting today and for being a member of NGS. We look forward to continuing to be there to help you prepare for your tomorrow.